Good morning, everybody, and welcome to the Ankerstar Wealth Morning Update. Steve and Mike here. Mike is at home. I am on the road, as you can tell from the background, at a volleyball tournament that runs Friday, Saturday, Sunday in lovely Philadelphia this morning, where it's 38 degrees, which is kind of reminds me of why I moved to Texas to get out of the cold. We got a good show for you today. We're going to talk about three things. First of all, I'm going to talk about what Chairman Powell said yesterday about potential rate cuts, what he said, what the whole world is saying that he said, as well as how that affects your portfolio. And then I'm going to turn it over to Mike. He's going to talk about the jobs number that came out this morning, as well as unemployment and how that might affect the markets. And then he's going to conclude with Doximity, which is one of our exponential growth opportunity stocks out there. So before we get started, though, it's a financial education presentation. You have to do your own due diligence before acting upon anything you hear in this presentation. Full disclaimer information is available at ankerstarwealth.com. Now let's get going with the CNBC screen. You should be seeing right here. And this is the Powell article that says the Fed is not far from the point of cutting interest rates. They took that not far as one little tiny bit out of like hours of testimony. And that's what all the headlines are saying. Oh, we're not far. Well, I wouldn't get excited about that. He said that everything is basically, if I were to summarize it, he said everything's fine and they're going to entertain maybe cutting rates later on in the year. So to say that he, not far means like this, next month or so, that's not what he's saying at all. He says we're going to wait and see like they always do. But as far as your portfolios, once the Fed does start cutting rates, that's when you're going to see generally the market starts to take off, right? You get that cheaper money out there. So that's why everybody's so interested. But don't hold your breath. We got a big election first that, brings out its own craziness. So I do not expect, I'm still of the stance that not this year, even though it looks like it might be towards the end of the year, but I've been saying not this year. So I'll just go ahead and stick with that. All right, Mike, I'm going to stop sharing. I want to go over to you and tell us about what you have for the unemployment number and jobs number.
Okay. So I know unemployment is always a number that people are somewhat familiar with. We believe when unemployment goes up that's a negative thing, which it typically is, but the markets don't always see it that way. So the unemployment number actually went up to 3.9%. So this is now the 27th month in a row that it's under 4%, which is an incredible run. So really since the COVID times, it's been low. But when the unemployment is very low, then you have wage growth, inflation, it's all tied together. So while we may think, oh, unemployment's going up a little bit, the market actually reacted very favorably to this. And part of it ties to what Steve just talked about with rate cuts is, unemployment goes up, rate cuts could be coming sooner or, at least possibly this year. So the market has reacted favorably. What I did think was interesting on the unemployment, just a little more on that, is there was some downward revisions to past months. So they went back and they said, oh, in January, there weren't really 300,000 new jobs. There were only 229,000. So that was, that sounds negative to us if you were in the job looking for a job, but for the market, that's considered positive. So some of this is just counterintuitive. Another thing I thought that was interesting is they said hourly earnings were weaker than expected, but people worked more hours. So in a sense, if I'm a worker, I'm thinking that's not really good. I'm working longer at less pay. But when you look at overall, you'd say, but the actual earnings were about the same. So, just some different things that you see there. So, when you think of the numbers, we are still at a historically low unemployment rate here. And we won't even get into, what percentage of people are looking for jobs and things like that. But the market doesn't always react the way we would as a job worker. So, and then the other part I wanted to cover today was one of our ego stocks called Doximity. And I've not hit this before. So I'm going to bring up the chart. And what Doximity does is think of Doximity as the LinkedIn for doctors. So Doximity connects doctors with patients, with hospital systems, and is really used for communication. And one of our thesis is as things become more virtual, which they have, and as technologies developed, this is one way to reach into another realm, into the healthcare out of the tech field. Now, and hopefully this stock goes up accordingly. You can see over the past year, I wouldn't say that it's done that great, although you can say over the last 6 months it has. So it's went up. It has not went up as fast as a pure tech stock play. Some of the ones that you're very familiar with that we've covered before. But still the belief is this will become more common. And as there's more people growing older, there's more opportunity for connecting using phones, using iPads, using that kind of technology. And I'll still say, as a person that's been in the healthcare field, the doctor-patient relationship is done mostly face-to-face, and that's the way we prefer it. But there's times when it could be done not face-to-face, and this is what the opportunity we're trying to take advantage of. So, if you got a broken leg, we're not saying dial in on your iPad and self-diagnose, but for example, if you had migraines, I'm not sure there's the doctor can do much face-to-face. So there's opportunities for this for the future. So I'm gonna scroll down and show earnings. The earnings on this stock have been very good. They've hit their earnings. Those green arrows show that they hit what they project, and they've done well. I did want to share a screen just to kind of show you it's a little commercial off their website, but you can see that the doctor can share screens, do call nudges, reach out to people, and I still think you get the balance of where do we use this? Where do we, how can we use this effectively? So this company is called Doximity. It's one of our ego stocks. I have used telehealth before. I haven't used Doximity specifically to reach my doctor, but I've used telehealth successfully. I want to say 20 to 30% of the time that I've reached out to my doctor. So anyways, that's all I've got on this one. Turn it back over to Steve.
I'm excited for this stock. I think it's one of those rare stocks that hasn't run yet, and that's what we're trying to do is catch one before it runs. But certainly, solid idea. So we will monitor where it goes from here. So, and thanks for the unemployment job stuff, Mike. I know we just barely touched the surface there, but that's all I've got time for today. So for everybody out there, enjoy the weekend, and we will see you guys back on Monday. Have a good one. Bye.